Welcome, everybody. We are here for another eye opener, and I am super excited to have Blane back. Blane, we talked the other day about a pattern that was setting up. And at the time, I got to tell you, man, I was a little skeptical. I was looking at everything, I was looking at stuff that probably I shouldn't have been looking at because I was distracted. And I've said this multiple times, and yet I still got distracted. And man, I don't want to jinx anything, but I think you nailed it. I think you saw it coming, and you made the call. You were just short of Babe Ruth pointing at the center field wall and then parking it out in the cheap seats, man. So I'm gonna keep my fingers crossed for you that this plays out, and if it does, it's something that I think can really be lucrative for everybody. So great to have you back. I want to dive into that, and I also want to see what else you're looking at, man. So thanks for being here.
Yeah, 100%. Well, thanks for having me, John, and happy Wednesday, everybody that's tuned in. Love to be here. Love to be talking stocks and the market and just what's going on. But yeah, exactly as you said, I'll go ahead and share my screen so we can hop in case somebody missed what I was talking about earlier in the week. But yeah, I mean, there was kind of as I mentioned on Monday. Towards the close, I'd sent it out via our Telegram channel, after the close, because I saw a very clear and definitive, it's a very reliable technical pattern that was printed on the chart at the close on Monday. And it was this bar right here, John, just for anybody who wasn't tuned into those messages, but it was getting that massive buy signal, that bullish engulfing day right here. It's this bar or candle, depending on which type of chart you're looking at. But seeing this bar right here, where the total range for the day on the upper end and the lower end was wider on both ends than the previous day, and seeing that close higher on the day, that's a very reliable bullish reversal pattern right there on the chart, and typically precedes a nice up leg and move higher in stocks. And you can see obviously there was some news factoring in there that broke just after the close, but I think the reason you got that pattern is because the market was starting to sniff out and investors were starting to sniff out that news was likely going to be coming in the next 24 to 48 hours. You can see, in fact, that's exactly what happened. You got a massive leg higher in the market yesterday. You can see the stock, this is the S&P 500 index chart right here. And of course, you can see stocks jumped significantly higher yesterday, a nice about 75% positive day, looking across all the flows in the New York Stock Exchange, NASDAQ. So a wildly bullish day on the markets. And it pushed the index with just an earshot of the current 52-week highs. It's less than 1% away from making that new 52-week high, and it certainly looks like it's on its way. But it's really significant, John, because not only do we get that buy signal, and then we got very quick follow through and confirmation that that is indeed what was going to happen. You and I have been talking about this quite a bit over the past couple of weeks. We've well communicated that the S&P's kind of been stuck in a consolidation pattern, kind of range bound for a couple of weeks now, because momentum had kind of died off, kind of petered out. And there was kind of a lid on stocks at about 6,050. They struggled to get up and break through that level. They went up and challenged it a handful of times, but there really seemed to be a pretty significant level of resistance right there. But with yesterday's trading, and of course today's follow through and today's price action, you can see that's clearly broken through that level of 6,050, and it's trading right around 6,100 now. And we may not be going directly straight to new all-time highs on the index, but we're certainly not very far away from it. I mean, I think the intraday all-time high is, I think, 6147, if I remember correctly. So we're
Right. Yeah.
about 50 S&P points away. That's less than 1% move
That's a
higher from
yeah.
here at current
That's
prices to get there.
That's a hair away from it. And, we got momentum up today, pushing us towards it. Yeah, all signs point to that's exactly what's going to happen here.
Exactly. So I anticipate in rather, short order, we'll probably be looking at new all-time highs set on the S&P 500. And of course, still keeping a very close eye too on that golden cross, which is, mathematically at this point, almost guaranteed to happen in the next roughly week to week and a half. So, that gap between our two moving averages here is closing very rapidly. You can see the trajectory. They're certainly on a collision course. It's frankly just at this point a matter of which day it's going to happen. Given that these are moving averages, again, mathematically, barring some just crazy black swan event that would have the power to turn this average around, they're on track to converge with one another and move higher. So, great looking technical setup there. Really, really strong bullish action for investors. So, just very encouraging and constructive signs what we're seeing here. But John, the next thing I want to touch on, this is just to rehash on the trade I actually touched on Monday session for Lamb Research LRCX. So if you
Mhm.
remember, there was a call option that I had highlighted. It was the LRCX August 15th 85 strike call, because I had mentioned this was Monday's bar right here. And I was saying, there was a clear technical buy signal for this stock, very nice pattern. It was breaking out into a really constructive trading pattern and looked like a very strong trade setup as of Monday. And as you can see, the stock has had quite a rally since then. It's a little bit off of its intraday highs from today. But I checked the call option that I had just highlighted in
You
Monday's
had said,
call.
I think they were like 8:55 when we were talking about it on Monday. Is that right?
Exactly right. It was trading at 8:55 then, and just before we hopped on today's call, that 85 call had rallied up to 14.03. So that just did the quick
That's
math
all?
ahead of
That's
time.
all. That's the best you can do? That's almost
Yeah,
double. Come on, Blaine. We need more than that.
yes. I
Geez,
mean,
that's awesome, man.
just a cool 64% in just a couple days. So, that one's
Wow.
working out pretty well. So, definitely keep an eye on it. But, it's moved a little bit at this point, but working out pretty nicely so far.
That's awesome, man. Way to go. Love when we can see those things. I love even more when we can share them with everybody and they kind of get a sense of what's going on. We are in a tough business. We're all trying to trade. We're all trying to predict the unpredictable. And a lot of times, we sound like weathermen, there's a chance of this, a possibility of that, that kind of thing. And when you can see something that you really believe in and share it, it's a great feeling. So, I am hopeful that everybody got a chance to get in on that and really kind of, get the value out of it that we want to bring to the table on it. So, man, that's awesome. Good stuff, Blaine. Thanks for sharing that with us. So,
Yeah,
all right, but
absolutely.
that ship sailed, buddy. What you got for us now?
Yeah. So that one's in the past. It's worked out. So, as a trader does, you're always looking for the next opportunity. So, where I'm still keeping my eye pretty closely right now, John, is I've touched on this in recent weeks a number of times, but I'm doing it again because I think it's really important. In markets, whether when they're breaking out or if even when they're in consolidation periods, we're obviously seeing a breakout market wide right now. Regardless, when you're still trying to pick your spots and identify the best opportunities out there, you want to know where the strongest pockets of strength are and where that momentum is really working, where money's flowing through, where the trading action is. And, that's why I have this chart pulled up right here. This is one of my favorites. It's a ratio chart. I've talked about these a lot recently. And what is looking at a ratio between the XLK, which is an ETF, it's tech sector ETF. It's looking at the ratio between that and it's being divided by the S&P 500. So our numerator here is XLK, denominators the SPX, or S&P 500. And what this chart tells you, you can ignore all the numbers over here on the side. That's not really important. It's simply just a trajectory of this line. So when we see this line trending up right here, that is signaling that our numerator, in this case XLK, is beginning to outperform relative to our denominator, in this case the S&P 500 index. Now, of course, the S&P 500 index, nice trend lately. Momentum kind of stalled out of late until the last couple days. But can see over this whole period of time right here, essentially, XLK has been greatly outperforming the S&P 500, even though the S&P has been performing nicely during this period of time. XLK has been performing even that much better. So that is signaling the XLK, the tech sector as a whole, that sector is signaling a great amount of strength. Now, of course, you could look to trade it by, just trading the XLK ETF. That's certainly an opportunity. I know that we personally have a couple trades out there in our different services for XLK right now. But there's different components of that ETF that also might be presenting great opportunities. And so that's what I wanted to touch on today, John, was actually one of the opportunities at today's current prices that I think, it belongs to this tech sector. It's one of the, one among this sector that's outperforming so greatly relative to the broader market. And the stock I'm going to talk about is Amazon. So you can see I have my chart pulled up right here. This is looking at the past year's worth of trading for Amazon, last year's worth of price action. And just a couple things I see right off the bat here. We have a very clear, definitive technical buy signal that's currently printed on this chart for Amazon. So you can see roughly midway through last month in May, we had our 21-day EMA right here cross above our green line. So our red line right here crossed above the green line. So our 21-day EMA crossed above our 63-day EMA, initiating or EMA technical buy signal there. So very clear. And you can actually see the distance between those two has actually been widening out ever since that buy signal. So that's to me signaling that buy signal is getting even stronger. And the stock's currently trading above both of them as well. So great technical buy signal there. We do have an RSI down here signaling that the stock's relative strength is improving. It's above 50, but it's not above 70 either. So that's signaling that Amazon, despite the current nice bullish run that it's on, is not currently at an overbought state. So it's offering an attractive entry point for a trade within the context of this larger bullish up move. And again, that's being corroborated up here as well. We have our Keltner channels overlaid on the chart. You can see where the stock's trading at. It's actually just about 213 per share right now. That's well within our Keltner channels, particularly the upper Keltner channel band. So again, signaling that despite this stock being in a nice bullish uptrend, it's not currently overbought at current price levels. So, how would I look to go ahead and trade this? Amazon, obviously one of the big Mag 7 stocks, obviously gets a lot of attention. But one thing I'm looking at here is, their earnings are still a good ways out. I think it said that they're not reporting until August 7th. So, don't really have earnings too much to think about for quite some time. So have a good bit on that. And so with that, the options that are available for Amazon, particularly looking at the July 18th right here, this is one that I honed in on. It was this July 18th 200 strike call. They're not carrying a great excessive amount of time value right here at these current prices. They're not just weighed down by excess time value. These are fairly reasonably priced at current price levels. So I honed in on this one right here, John, this 200 strike call for Amazon. And I think the price has actually dipped a little bit since I looked at it. It's at 1523 now. So I'll go ahead and update our price there. But you can see right here.
I'm just keeping my notes here so I can hold you accountable on the next eye opener that
Yeah,
we're
go
on.
go ahead
So
and tally them down for Monday's call. Exactly.
yeah, exactly.
Um, but you can see right here, looking at just running it through a call option purchase calculator here, you can see looking at the risk to reward possible profit potentials for this call option. You can see it's coming in, a really nice profit potential being offered by this call, for the July 18th 200. You can see right here in this scenario, say Amazon rallies up, 5% come option expiration. You have a pretty significant amount of leverage on this call. You have a pretty outsized return there compared to just owning the stock. This call option would be up 60.5% in that scenario. And you can see a couple of the bigger moves down here as well. You can see the 100, or excuse me, the 10% up move in Amazon stock right there. That would translate to almost a 30 or 131% return for that call option. So some really nice profit potentials there in this trade opportunity for Amazon right there.
It looks all very familiar to what we were looking at Monday with your pick from Monday, and the tool kind of helped you out in finding the right sweet spot for it. It's good to see that again. Great to be able to share this with everybody. This is the kind of insight that you know so many people need. They really want this kind of stuff. So good to be able to put it out there for everybody.
Yeah, absolutely. I'm, love to be able to do it. And, I do it every weekend too, John, with my WPO. I go a little bit more in depth. I include some additional information that's, really key, kind of like, profit targets, stop loss levels, things like that I would also include that are really key when I'd be looking to place a trade. But yeah, I love the stuff. Helene and myself and Chuck, we all sit here, we eat, sleep, and breathe the markets. We're digesting this stuff all day. So we'd love to be able to hop on and get to talk about this and put out some of our top ideas.
So this is the key thing for everybody to remember here. As we jump on, we look at the broad market, we look at kind of a pick that we might have made recently, we look at another opportunity for people to get into. This is a mere sliver of what's available to you. Literally going from maybe catching one of these replays and looking at it, to go into getting the WPO is like going from UHF to high definition TV, man. It is a game changer. I might be dating myself with that reference, but it's unbelievable. And so very important to immerse yourself, to be in sessions like this, but then seek out the tools that are going to keep making you a better trader, giving you ideas, giving you the background, the context behind a trading setup, not just giving you the fish, teaching you to fish. That's what WPO is about, the weekly profit opportunities. And it's a great, I call it a gateway service, man. It's the kind that'll get you hooked because it's $1 to get started. Try it out, see how it goes, follow some of the trades, track them on paper, trade them with a small position, see what you think, find out what works for you. I'm a huge fan of Blaine's style. It works for me. I could sit and talk to him all day long, as many of you guys have seen. We talk quite a bit, but you got to find that style that works for you. So go out there, and when you can find things you can test for just $1, I don't know how you can miss that. So link is going to be in the email. I want to see if we can, in the last few of these, Blaine, we've had so many people jumping on that offer. I know that the number has kind of jumped up on this thing lately. That tells me that there's something going on. It's not just us preaching it, it's people walking the walk. They're in there doing it, using it, and so that's been successful. So we're going to keep telling people to jump on and give it a try. I want to see this thing take off. I really want to see more people getting the benefit out of that. So we'll put the link in the email and share it with everybody. But yeah, and as always, man, greatly appreciate your time, the effort that you put into researching all this stuff. What a huge help to have somebody doing so much homework for you. Thank you.
That's what I'm here for. I love doing it. I love, putting in the time to do some of this research. And, I really personally get a lot of enjoyment out of it. I really enjoyed doing this and, kind of digging through all this data and finding these different opportunities. And most importantly, be able to come here and share them with you all to just, kind of report my findings. And I hope you all find it super helpful. So, hope everybody enjoyed the call. And John, thanks again for having me here. Always love getting to sit down and do these chats with you. So, looking forward to next week.
Absolutely. Yeah, we'll see you on Monday for sure. So if you guys are watching this, jump in there and get registered for Monday's session. We want to have some actual humans in there calling us out, holding us accountable, and asking questions. So we'll see you guys on Monday. Blaine, thank you again for all your time, man.
Yep, absolutely. Thank you, John. Take care. I'll see you next week.
Bye.